For years, Dubai looked like the ultimate symbol of modern wealth. In just a few decades, the desert transformed into a futuristic empire filled with luxury hotels, artificial islands, and skyscrapers like Burj Khalifa, the tallest building on Earth. Millions of tourists arrived every year, chasing the fantasy sold across Instagram, TikTok, and global media. Supercars, rooftop infinity pools, and a city where money seemed limitless. After the pandemic, the boom became even bigger. Wealthy investors, crypto millionaires, and foreign entrepreneurs flooded into Dubai, sending luxury real estate prices soaring across 2021, 2022, and 2023. But beneath the glowing skyline, something has quietly started changing. Luxury apartments are taking longer to sell. Some hotels are lowering prices during slower seasons. Foreign workers are struggling with rising rents and living costs. And analysts are beginning to warn that Dubai's economy may be relying too heavily on endless tourism, foreign money, and ultra-luxury real estate. What makes this story unsettling is that Dubai has experienced a devastating property collapse before, during the crisis of 2008-2009. The city recovered once, but now, many are wondering whether the cracks appearing beneath Dubai's luxury empire are starting to return again slowly, silently, and dangerously. Just a few decades ago, Dubai was a relatively small trading port in the desert. Unlike neighboring Abu Dhabi, Dubai did not have massive oil reserves capable of supporting unlimited long-term wealth. By the late 1990s, leaders in Dubai realized something critical. Oil alone would never be enough to secure the city's future. So instead of depending on natural resources, Dubai decided to reinvent itself as a global luxury capital. What followed became one of the most aggressive urban transformations in modern history. Across the 2000s, billions of dollars were poured into giant projects designed to attract wealthy tourists, international businesses, and foreign investors. Massive landmarks began rising from the desert almost overnight. Burj Khalifa became the tallest tower on Earth. Palm Jumeirah reshaped the coastline into giant artificial islands visible from space. Burj Al Arab turned into one of the world's most recognizable luxury hotels. Giant shopping malls, indoor ski slopes, luxury marinas, and ultra-expensive waterfront villas followed. Dubai was no longer selling itself as a normal city, it was selling an experience. The city aggressively marketed low taxes, luxury lifestyles, modern infrastructure, and international business opportunities. Wealthy entrepreneurs, celebrities, influencers, and investors started flooding into Dubai from around the world. Tourism exploded, luxury real estate prices surged, foreign money became the fuel powering nearly every major sector of the economy. After the pandemic, the boom accelerated even further. During 2021, 2022, and 2023, wealthy individuals moved huge amounts of money into Dubai. Crypto investors, Russian elites, European entrepreneurs, and global influencers relocated there seeking tax advantages and financial safety. Luxury villas sold for record-breaking prices. Some neighborhoods saw property values rise dramatically within just a few years. Social media amplified the image non-stop. Videos of penthouses, supercars, yacht parties, and rooftop pools turned Dubai into a symbol of modern success for millions of viewers online. But underneath the glamorous image was a fragile reality. Dubai's economy became heavily dependent on continuous flows of foreign capital, tourism, and luxury spending. The city's rapid growth relied on one dangerous assumption, that wealthy buyers and international investors would continue arriving forever. And that dependence would eventually become one of Dubai's biggest vulnerabilities. For years, Dubai felt unstoppable. Millions of tourists arrived every year chasing the luxury lifestyle they saw. Online beach clubs, rooftop infinity pools, supercars, luxury shopping malls, and ultra-modern skyscrapers glowing across the desert skyline. During the post-pandemic boom of 2021 through 2023, Dubai became one of the hottest destinations on Earth for wealthy travelers and global investors. Hotels were packed. Luxury apartments sold at record prices. Influencers flooded social media with videos presenting Dubai as the future of modern wealth. But quietly, signs of slowdown have started appearing beneath the surface. One of the biggest problems is cost. Living in Dubai has become dramatically more expensive in recent years. Rent prices surged across many districts. Luxury hotels raised prices aggressively during the boom period. Restaurants, transportation, and everyday expenses also became significantly more expensive. As a result, some tourists have started looking at cheaper luxury alternatives in places like Thailand, Qatar, and Saudi Arabia, which are now investing heavily in tourism and entertainment. At the same time, online audiences have started showing signs of luxury fatigue. During the peak influencer years, endless videos of Dubai penthouses and supercars dominated social media feeds. But many viewers have become increasingly skeptical of heavily curated luxury lifestyles. Some travelers now describe Dubai as overly artificial, overly commercialized, or built more for social media than real life. This shift matters because Dubai's economy depends heavily on maintaining global excitement around its image. If fewer wealthy tourists see Dubai as the ultimate luxury destination, the effects can spread quickly across hotels, restaurants, retail, and real estate. Behind the scenes, some luxury hotels have already started offering discounts during slower travel periods just to maintain occupancy. Certain luxury rental markets have become more competitive as additional supply enters the city. Real estate analysts have also warned that Dubai may be building luxury properties faster than long-term global demand can support. Another growing issue involves foreign workers and middle-income professionals, the people who actually keep the city functioning every day. Rising rents and living costs are making it harder for many workers to remain in Dubai comfortably. Some residents are spending huge portions of their salaries simply covering housing expenses. Others have quietly started relocating to cheaper neighboring regions. That creates a hidden risk for Dubai's entire economic system. The city's luxury image relies on enormous numbers of workers supporting hotels, transportation, restaurants, maintenance, and tourism services. If the cost of living continues rising too quickly, retaining enough workers could become increasingly difficult. On the outside, Dubai still looks spectacular. The skyline still shines every night. Luxury brands continue opening stores. Influencers still post glamorous videos. But beneath the polished image, more businesses are quietly starting to wonder whether the explosive luxury boom that transformed Dubai over the last decade may finally be starting to cool down. Real estate has always been the foundation of Dubai's economic model. Luxury apartments, waterfront villas, branded residences, and futuristic mega projects help transform the city into one of the world's most recognizable investment destinations. But real estate has also been Dubai's biggest weakness. During the global financial crisis of 2008-2009, Dubai experienced one of the most dramatic property collapses in modern history. Home prices in some areas reportedly fell by more than 50%. Massive projects were cancelled or abandoned halfway through construction. Investors panicked. Thousands of foreign workers left the city. Some wealthy residents reportedly abandoned luxury cars at the airport before fleeing the country because they could no longer repay debts. Dubai eventually stabilized the crisis through restructuring, financial support, and aggressive marketing aimed at rebuilding investor confidence. Over time, the city successfully restored its image as a global safe haven for luxury and investment. But now, some analysts believe familiar warning signs are beginning to appear again. Across Dubai, developers are still launching giant luxury projects at an extraordinary pace. Ultra-high-end towers, artificial islands, branded residences, and waterfront mega-communities continue entering the market. Billions of dollars are still being invested into new developments designed for wealthy international buyers. The problem is that Dubai's luxury property market depends heavily on continuous foreign demand. Unlike many major cities with large permanent populations, a significant portion of Dubai's high-end real estate is purchased by investors rather than long-term residents. That means the market is extremely sensitive to global economic conditions. If wealthy international buyers become more cautious, demand can slow very quickly. Some signs of cooling have already started appearing. In several luxury districts, transaction activity has reportedly slowed compared to the explosive pace seen during 2021 and 2022. Certain luxury rental markets are becoming increasingly competitive as more units enter the market. Analysts have also warned that supply in some high-end segments may eventually outpace real demand. Another major pressure point involves global interest rates. During years of cheap money, borrowing for luxury real estate became relatively easy. Investors could finance expensive properties with lower risk. But as interest rates rise globally, borrowing costs increase, and speculative investment becomes far less attractive. This directly impacts Dubai because much of its property boom has been fueled by international investors seeking fast appreciation and luxury assets. Some experts now describe Dubai's current situation as a silent freeze. Unlike a sudden crash, a silent freeze happens gradually. Buyers become cautious, transactions slow down. Developers quietly delay projects. Prices stop rising as aggressively as before. Yet outwardly, the city still appears successful because construction continues and luxury branding remains everywhere. This makes the slowdown harder for outsiders to notice immediately. There is also a deeper financial concern. Many of Dubai's newest projects are incredibly expensive to maintain long-term. Artificial islands, luxury waterfront communities, massive resorts, and climate-controlled attractions require enormous ongoing investment. If tourism and foreign spending slow while maintenance costs remain high, financial pressure can quietly build beneath the surface. Dubai built its global reputation on constant expansion, bigger towers, larger resorts, more luxury, more investment. But the danger for a city built around non-stop growth is simple. Once momentum starts slowing, even slightly, the entire system can begin feeling the pressure very quickly. Behind the luxury hotels, rooftop parties, and futuristic skyline of Dubai is a reality most tourists never see. The city's economy depends heavily on millions of foreign workers who keep the entire system running every day. Construction workers, hotel employees, drivers, retail staff, restaurant workers, cleaners, office professionals, and service employees from around the world help transform Dubai into a global luxury empire. But many of them are now facing increasing financial pressure as the city becomes more expensive every year. One of the biggest problems is housing. During the luxury boom of 2021, 2022, and 2023, rent prices surged across many districts of Dubai. In some areas, rental increases became so aggressive that middle-income workers suddenly found themselves struggling to afford apartments they had lived in for years. Many residents were forced to move farther away from central districts or share crowded apartments to reduce costs. Transportation expenses and daily living costs also continued rising. For many workers, the city that once represented opportunity is slowly becoming difficult to sustain financially. This creates a serious long-term risk for Dubai's economy. Luxury cities still rely on huge numbers of ordinary workers to function properly. Hotels need staff. Restaurants need employees. Shopping malls need workers. Transportation systems need drivers. If living costs continue increasing faster than wages, attracting and keeping enough workers becomes harder over time. At the same time, Dubai is facing growing regional competition. Saudi Arabia is now investing hundreds of billions of dollars into futuristic mega projects, luxury tourism, and entertainment industries designed to compete directly with Dubai. Other Gulf countries are also expanding aggressively into finance, hospitality, and international business. Dubai is no longer the only luxury hub trying to attract wealthy visitors and global investors. Another hidden pressure comes from image management itself. Dubai's economy depends heavily on perception. The city must constantly project wealth, success, safety, and expansion in order to keep attracting tourism and investment. Social media influencers, luxury events, international branding campaigns, and glamorous marketing are not just entertainment, they are part of the economic engine. But maintaining that image becomes more difficult when financial pressure starts building underneath the surface. Some analysts now believe Dubai faces an identity problem. Is it truly a sustainable long-term economic powerhouse, Or is it a luxury spectacle that depends on endless outside money continuing to flow in forever? The answer matters because if investor confidence weakens significantly, Dubai's growth model, despite the growing concerns surrounding Dubai, the city still holds enormous advantages that most countries would struggle to replicate. Dubai remains one of the most recognizable luxury brands on Earth. Its airports connect major global markets. Its infrastructure is among the most modern in the region. Millions of tourists still visit every year, and wealthy investors continue purchasing high-end real estate across the city. On the surface, Dubai still appears stronger than ever. But the deeper concern is not whether Dubai will suddenly collapse overnight. The real concern is whether the era of explosive, unstoppable growth that built the city's global image may finally be slowing down. Dubai's economy depends heavily on several fragile pillars at the same time: luxury tourism, foreign investment, real estate speculation, and continuous inflows of wealthy international residents. As long as global money keeps flowing, the system works. But if the world economy weakens significantly, those flows can slow down very quickly. Wealthy investors may become more cautious. Luxury buyers may delay purchases. Tourism spending could decline. And because Dubai's economy is so interconnected, pressure in one sector can spread rapidly across the others. Real estate affects banking, tourism affects retail, foreign workers affect the service economy. Everything is connected to growth, continuing non-stop. That is why some analysts fear Dubai may face something even more dangerous than a sudden crash: a prolonged slowdown. A slow cooling period where property prices stop rising aggressively, luxury demand weakens, and massive projects become harder to justify financially. In cities built around permanent expansion, slowing momentum alone can create enormous stress beneath the surface. Dubai spent decades selling the world a vision of the future: bigger, richer, taller, and more luxurious than anywhere else. And in many ways, it succeeded beyond imagination. But now, the city may be approaching the same difficult question every luxury empire eventually faces. What happens when the growth that built the dream finally begins to lose speed? At night, Dubai still looks like the future. The skyscrapers glow across the desert skyline. Luxury cars still race down the highways. Influencers still post videos from rooftop pools and billion-dollar penthouses. To millions of people around the world, Dubai continues to represent success, ambition, and limitless wealth. But behind the lights, the pressure is growing. Rising living costs, slowing luxury demand, increasing global competition, and a property market showing signs of strain are quietly testing the foundations of the city's economic model. Dubai may not experience a dramatic collapse tomorrow. In fact, it could remain one of the world's most famous luxury destinations for many years to come. But the real danger may be something far slower and harder to notice: a silent cooling hidden beneath the image of non-stop growth. Because cities built around constant expansion become vulnerable the moment momentum begins to slow. And for a place like Dubai, where luxury itself became the engine of the economy, even small changes in tourism, investment, or global confidence can create powerful ripple effects. The city that once symbolized the future without limits may now be entering a very different era, one where maintaining the dream becomes far more difficult than building it.